Bitcoin did 3x its previous all-time high in the last cycle. Does it do that somewhat less because, as you get more maturity, maybe it does less? ETH, well, maybe ETH does 3 times its all-time high like Bitcoin did in the last cycle. So that's kind of how I'm thinking about it, is versus all-time highs.
Hey guys, welcome back to Everyday Finance. In this video, Raoul Pal discuss about Bitcoin and cryptocurrency. Raoul Pal says, if an ETF for Bitcoin had been introduced in October, you would have had no buyers this time last year. So, the issue is one of cost. Therefore, as soon as the narrative picks up, the liquidity returns, and individuals have some money left over to invest. Take a look. Nobody has any money at the moment. Everyone is in need. Everyone has had hardship. Due to everything being below record highs, there are no recycling gains. But as soon as that begins, money will start coming in. Therefore, let's say January occurs. Actually, at this point in the cryptocurrency markets, the crypto summer should begin by the summer of the next year, from around April onwards, and I believe it indicates that the channel is now available and cash can be brought in. And lots of things Raoul Pal discuss, so please watch the video to end and share, subscribe our channel Everyday Finance. Thanks.
So I think it probably gets approved this year, but I don't know. I have no edge in that. And it's really a matter of price, right? If you'd have launched a Bitcoin ETF in October of last year, you would have had 0 buyers.
Yeah.
So it's a matter of price. So the moment the narrative starts picking up and the liquidity comes back and people have got some money to invest again, look, nobody's got any money right now. Everybody's skint. Everyone's had a tough time. It's got no recycled gains because everything's below all-time highs. But once that starts happening, money will flow in. So let's assume January happens. Well, usually by this stage in the crypto markets, we should start hitting crypto summer by summer of next year, from sometime after about April. And I think that means that now the channel is open and people can take money in. So as you rightly say, there's a lag because the markets aren't, the market narrative isn't ready to bring in billions and billions of dollars. But if crypto does its crypto thing, and by kind of Q2, Q3 of 2024, the markets are starting to rip, interest rates are coming down, liquidity's in the system, people are making money. Oh yeah, we'll see, tens of billions of dollars coming into this. I'm not going to do that game anymore because, you've seen it, right? Online, It just you just get beaten up.
Yeah.
People just say, well, you said, as if it's a promise or something ridiculous. So I just say, listen, Bitcoin did 3x its previous all-time high in the last cycle. Does it do that somewhat less because, as you get more maturity, maybe it does less? ETH, well, maybe ETH does 3 times its all-time high like Bitcoin did in the last cycle. So that's kind of how I'm thinking about it, is versus all-time highs. I think the space probably ends up, in the end, closer to a $10 trillion asset class than it is $1 trillion today. So is there a 10x from the space? Possible. Is it a 5x instead? Maybe. But, I don't really think in terms of where it gets to in price. It gets to where it gets to. You just need to be in it for the ride. I think a lot of the exploits are with the smaller ones. While there's many that have been running for a long time, that have had less exploits and less issues, again, it's things like MakerDAO and Aave and stuff like that. They've been going for a long time. They're kind of proven entities, but it's the new ones that pop up that offer super high yields with a new smart contract that's not been tested. Suddenly the wallets get drained. So I think over time, things probably go to the larger players until some new breakthrough in whether it's technology or ways of doing things plays out. DeFi space is very difficult. I personally don't use it because I'm comfortable with the risk. If I'm buying a cryptocurrency, and I put it in my Ledger wallet, I know the risk that I've got there. I've got the risk of something happening with my ledger or my seed phrase, and I've got the price risk. But once I start earning yield, particularly if I'm not doing, native staking and I'm giving it to a third party to stake or whatever, well, now I've got another risk that they blow up or my money gets drained. So then you're adding incremental risk. Are you getting paid enough for it? Is that 5% enough that you could have your wallet drained? I don't think so. Well, this is a Darwinian game and it's survival of the fittest. And if you step back and say, in the Western world, who is the fittest? Well, Coinbase.
Yeah.
Right? It's kind of a winner takes all for them right now. Yes, there's other players, Kraken, there's crypto.com, but there was a lot of, we don't know how bad they probably got pretty close to the edge at some points. We don't know. Binance is a whole different thing. But, if I look at, for the West, I mean, what we've done is cleaned up a load of shit and ended up with Coinbase. And Coinbase has proven themselves. I mean, they're an incredibly well-run organization. And Brian Armstrong has been an incredibly good leader as well. So I think, okay, that's fine. Now, we obviously want more choice than one super giant. And we do have some choice, not enough yet. But, let's see what develops over time. I think there'll be, we've seen this institutionalized exchange that people are talking about building. Let's see what other people do within this. But over time, I just think it's survival of the fittest, and that's probably a good thing. I think it's either going to pass through the courts, and we've seen that already happening. So some of the more egregious overreaches get ruled out by the courts. But in overall crypto regulation, look, it seems to be political for some unknown reason right now, and nobody really understands why that is. Why has it become, maybe it's about the fragility of the financial system itself that is what they're trying to protect here. But what I do know is we've seen the US make these mistakes a few times in the past. So after the US came off the gold standard back in the 70s, they had a restricted capital controls because they wanted to protect the dollar. There was these free-flowing currencies. Nobody knew how it worked. So the UK said, well, people need to exchange between currencies, and they started the global FX market, became the biggest market the world's ever seen. Mm-hmm. Then the US became protective over its banking system and said, well, we don't want to be the lenders all the time. We don't want to be involved in international lending, and they restricted lending. The UK set up the Eurodollar market, became the largest market the world has ever seen, which is the offshore borrowing and lending of US dollars. The next part of that became in the late 80s, the derivative market started. The US had a stranglehold on futures and options. But OTC derivatives started with swaps, and then other stuff started. And the US banking regulation didn't allow them on the balance sheet, so they restricted regulatory capital. So the UK changed the rules, as did the EU, and the swaps market started, and the $1.4 quadrillion derivative market came out of the UK. So if we step and look at this, here's the US stumbling again over protecting its own banking system and financial system and its dollar supremacy. The UK is the most likely disruptor. And if I grew up in the UK in the 90s, that wave was all the US investment banks and US asset management firms based in London. Goldman's main office was London, not New York. Now the headquarters is New York, and they're listed in New York. So if the US screws this up, Coinbase's main office will be in London, as will A16Z crypto, as will everybody. And London will create the regulation required to make it global. And London has the trade linkages with Singapore, Hong Kong, the EU, Switzerland, the Middle East. And that whole and the Cayman Islands, which is where most of the funds are based. So that whole architecture is already in place for the UK. So the US has a history of screwing these things up or dragging its heels, but somebody else will take it. So The US, sure, individuals will still be able to invest in crypto, but can you build a larger industry around it? That's the battle that's going to happen. So either the UK, the EU, and others take it, or the US smartens up faster. And that's going to be a political battle.